Hello, everyone. Welcome back to the channel, Matt with Green Bar Trading. So we have another weekly watch list video for you guys here today, and it's going to be jam-packed with information about the week ahead in the stock market. I'm going to go over many things, including the technical analysis on all three major indexes, where I see the market going, and we're going to go over a bunch of other things. Now, before I get into it, hit the thumbs up for the video. It makes a huge difference to the channel, and I do appreciate it so much. So we need to find out where the market's going. We're at all-time highs right now. Unbelievable week in the market. So, just getting right into it here, I like to use the Webull platform to go over the daily chart on the market. So we're going to go over the SPY, and then I'm going to go over the QQQ, and then we're going to look at the Dow Jones ETF. It's cleaner on here. Now, if I showed you my Thinkorswim charts, which I post every morning on our Discord, the key levels, it just is totally marked up. You wouldn't even be able to see this clearly on the daily chart. We made new all-time highs on the SPY. Now, the SPY, for those that don't know, is the ETF that follows the S&P 500. Well, we did pull back about 6% here, in September. And then in early October, we started that climb out. We got back to all-time highs here towards the end of last week, and then just built on that this week. Very strong market. But now this is what I was looking at before. Whenever we've done this, where we've pulled back a little bit and then came back to, higher highs, like in this channel we're looking at, we pull back a little bit, make new highs, pull back a little bit, make new highs, pull back a little bit. Now, are we at the area that we may pull back? Let's take a look at the RSI. This is the relative strength index. We are just about to overbought levels. Whenever we get up here, that's usually a sign that the market needs to pull back a little bit. I'm not saying that's going to happen. But what I am saying is if things are a little more overbought than they were back here, this is where you want to be buying when it's going up. RSI is going up, everything's looking good. And now you start to top out over here. We're at 68, 0.56. Overbought is technically 70. So, you see here when you do hit these levels, you get some pullbacks. So is a pullback coming this week? I don't think so. Now, the reason why I don't think that we're going to see a big pullback this week is because of what happened on Friday. We had Apple and Amazon on Thursday not do very well on their earnings. Now, that should have made the market tank on Friday. And while we started down, we just amazing recovery and just buying all day long on Friday. So that, to me, really suggests that we are in just an amazingly bull market. And there's no reason to be bearish at this point. Something like that, these big, huge companies like Apple and Amazon that have such a big weighting on the overall index, to have the index hit all-time highs on a day like that, to me, that is just very bullish. So that's the SPY. Taking a look at the Qs, this I actually drew out a little bit of a channel that we're in. So The tops of this channel here still give us some room, depending on when we hit it. It could go up to as much as 400 here. We're at 386 now on the Qs, and we had a very nice breakout from last week's weekly watch list video. We had went over this consolidation and then played the breakout on this. You can see here we bounced off of this trend line. Now, this trend line, these trend lines that you see, if you're new to the channel, this is called technical analysis. So if something touches like this 3 times, you're going to see the best bounce on that 3rd time hitting the trend line. Are we headed for the top of this channel? It does seem that way. And we did make new all-time highs on the Qs, so that's looking very good. But the RSI, if you want to pull this up, we are at overbought levels. So just, know that going in, that if we do see a little bit of a pullback, that's totally normal. We are at overbought levels. Now looking at the diamonds, same thing. We had a very narrow trading range here for, I would say, most of the year. And now it looks like we're breaking out and going to be in a new channel with the Dow Jones. This index is an industrial index. It's a value stock index. It is something that will do very well if, the infrastructure bill passes, if the economy rips and roars, this will do really well. So we're seeing the breakout, continued breakout on all of that, which is going to be really nice to see. So those are the 3 indexes, and the RSI is at overbought levels. So just know that we may be in a little bit of a pullback and then rip up, but it is definitely a dip buy type of market. So let's look at, this is something interesting. This is what I find interesting. This is the bull bear number. This is something that you can find just by Googling it. And I like to look at the Yardini report. Each week, they give the bulls and the bears. They ask a bunch of fund managers, if they're bullish or bearish. And this has been going on, like you see here, since 1987. They have been doing this. So what you would like to see, and what we are seeing, is a bull number that is still fairly low for hitting all-time highs on the stock market. The last time we did this, we were in the 60s for the bull number. So this, to me, suggests that there's still a lot more room to run, because if there are not people convinced at this point that it's a good time to buy, so you don't have as many bulls as you should, that means that there's a lot of money sitting on the sidelines, and they're not going to want to miss the moves as they see them happening. So there's more to add to the move. So that's why this is a contrarian indicator. When you see numbers that are fairly low for hitting all-time highs, that's a contrarian indicator, and that's very bullish. So I think that that is a very good sign right there. Now, if we look at going over to the earnings, there's a lot to get to, so I'm going to try to get to this pretty quickly. This is the earnings for the week. Jam-packed again. There is a ton of earnings. So if you're going to be trading stocks or options around earnings, I suggest don't hold through earnings. I made a video the other day of not holding through Apple earnings, and the swing was almost $500. It's those smart moves that will keep you consistently profitable, rather than a beginner that just keeps gambling. It is a gamble holding through earnings. I don't suggest that you do it. You will get lucky here and there, but over the long term, it's just not smart to do. So those are the earnings. And let's take a look at the economic calendar. So you have Monday and Tuesday, nothing crazy on those 2 days. And then you have right here, you have Wednesday. Okay. This is the Fed FOMC. They will be giving their, statement, their press conference, whatever you call it, at 2 p.m. on Wednesday. You want to be aware of this type of stuff if you are trading at that time, just in case they say something that the market doesn't like and it goes against the overall market for you. Just know that these things can move markets. On Thursday, nothing crazy. But on Friday, we have the NFPs, the non-farm payroll right here. At 8:30 a.m., they're expecting 194,000 new jobs created, with the unemployment rate at about 4.8%. This is stuff that you're going to want to be aware of as well, especially if you're swing trading anything going into Friday, as these can move the market as well. So let's see, where are we? We're going along pretty good. All right, now let's get into the 5 stocks that I am looking at for this week, okay? Apple is going to be one of them. And the reason why Apple is on my watch list is because of how this stock reacted on Friday. So on Thursday, we saw a beautiful breakout. Now, this was a breakout that we were playing in our Discord green bar trading community. We called it out for the break of 150. We were consolidating right around here. Got the breakout before earnings. That's when I took my options off the table, took my profit, and then we gapped down. The reason why Friday's candle here on the daily is a big green one is because when we gapped down, we opened up down here at about 147 and we closed just under that 150. That is a very bullish bounce off of earnings. We also bounced off the 20 EMA and the 50-day moving average. If we can hold up here, I am going to be looking to get long again for a break of 150 and see if we can continue that move higher, because this move off earnings was a very nice dip buy. But we are still under the 150. So I want to see 150 break first, and then you could get involved in the trade and have a low risk entry, and you can always cut it if you break back under that level. So that's Apple. That's my first pick. In no order, by the way, am I doing this. But this is my second pick here, is Peloton. Peloton has earnings on Thursday. Something interesting with Peloton and the supply chain issue is they were already putting money, and a lot of money, I think it was like $300 million, into solving their own supply issue. If you remember, a few months ago, it may have even been 2 quarters ago, when they started to get overwhelmed by a ton of demand and they could not match that demand with all the supply that they needed. So they actually rented out ships, containers. They put tons of money into getting the product where it needed to go. And I wonder if that is actually going to have helped them. And the chart is setting up pretty nicely. While we did start to break out of this level here, we did this, I think it was this past week we had called Peloton for a breakout of 90, and I'm pretty sure we broke this level, took profits up into the high 90s, and then you see a pullback. It makes higher lows, higher highs. Now we're looking for that break through 100 and through the 50-day moving average. You can see here that the 50-day moving average has been resistance in the past. So when we do come up to this level, we're going to want to see a break of the 50-day and actually close over it. And that would give us a lot of confidence in the break of 100. It is going into earnings, so we may see muted trade Monday, Tuesday, and Wednesday before earnings. But I do think it's going to hold up here, but you never know what analysts can come out and say before earnings. And if they start to lower their price targets, that can affect the trade. So you kind of want to play this a little bit on the safer side and not go in too heavy, as they do have earnings this coming week. So that's the second one. Let's look at my third pick for this week, which is going to be Plug. We have a very, very clear breakout on the daily chart. We broke over the 200-day moving average. We are in a very nice breakout. We saw highs of this stock into the 70s at the beginning of the year on huge, huge gap ups. I'm not saying this is going to happen again, but this is a breakout of this level. If we can come back maybe and retest this level a little bit, I would want to get long for the break of 40. In order for this to happen, and depending on how much it wants to break out from here, because it did have a nice follow-through day, it's kind of extended. So the trade would have been the break of this 34-33 level, which happened on Thursday and Friday. Let's see if we could get a retest and then take this long for Plug. We want to be trading with the momentum. That's the whole, point of day trading. You want to be trading what is really, really hot in the market, and energy is really hot right now. And that brings me to my next pick, which is F-Cell, fuel cell. This, to me, is a little bit more of a lower risk play as opposed to trading Plug, which is a more expensive stock. We already saw the breakout on Plug. Now, fuel cell, this one hasn't broken this level yet. So it's currently trading around $8. I can definitely see this going up to at least the 200-day moving average, which right now sits at 1071. If it does that, that is over 20% from here. And you can see we're making higher lows, we're making higher highs. This is, to me, if we can hold $8, would be a very nice looking day trade. So fuel cell, that's why that one's on my watch list. And then to wrap things up is going to be MGM. I really, really like this one. This is setting up for a beautiful, beautiful technical breakout here. And you can see here, every time it's done this, it'll consolidate and then break out to new highs. We're on a trend line here, nothing but a beautiful looking trend line, consolidating, setting up a nice, very nice bull flag. That right there is a bull flag on the daily, setting up for a break, and I want to see the break of 50. We do have earnings. Earnings are going to be on Wednesday. Let's see how it reacts after earnings. It usually does pretty good. but just know that you're trading something that does have earnings coming up. But this is setting up a very nice bull flag for a breakout on the daily chart. That's why this one's on my watch list. I'm going to be paying attention to this. This is a nice low risk entry. You have a clear, very clear level here at 46 that you could always cut this trade. It's trading over the 200, the 20 EMA. This is looking very nice. Very bullish daily chart, very clean, and we could get that break over 50. So a lot of information to digest. I get it. These are longer videos. It's a lot of talking, but maybe you take something out of the video for the week ahead, some day trades, some good information to carry forward with you guys. So I hope you enjoyed it. Hit the thumbs up for the video. If you're new, subscribe, and I will see you back on the next one. Take care.